I hear Nick in the background, though. Nick, are you there?
I am here. Knock, knock.
How's it going, Nick?
Minus 20. The market is not happy. I'm doing better than the market. Let's put it that way.
What's your? We've been kind of just giving the buy the dippers a lot of heat here this morning, and in the last 4 years, I've been saying it's learned behavior. Every time you buy the dip, you get rewarded. Eventually, that trade's not going to work. Don't you agree, Nick?
I do agree because I've said it before this year. This ain't 2013. In 2013, every dip was bought. Here, lately, in the last month or so, they have been acting like it's 2013, but the fundamentals are not the same. The fundamentals have not changed of late, but the fundamentals did not warrant the buy every dip mentality of 2013 to come back, and it did come back, and it took Apple to new highs, and it took the markets with it to ridiculous moves. Not everything at new highs, the SVX obviously is. So, to pinpoint the problem this morning, I think it's like what I said during the last correction in October. It's the death by a thousand cuts. Not one headline is big enough to take the markets down, but we've got a confluence of headlines that just keep rekindling. Like, who thought Greece would be the word today, right? We haven't heard that in a while. And China being down 4% or 5%, but it was up 5% on Thursday or Wednesday of last week. So it's just a bunch of little headlines that are rocking the psyche of the bulls that have been buying everything hand over fist.
Well, going to the S&Ps here, I know you like to look at the cash. I know you also said some warnings out on the small caps here. Do you have levels of support? I know you're not as really pinpoint technical as me, and I know that's kind of good because you kind of give things ranges and times to shake out and stuff. I'm looking at 2035 and a quarter in the S&Ps. That was November 20th low. Just how do you approach things like this? I mean, down 20. I mean, you got to get some kind of rip your face off rally here. Are you content shorting in the hole and then have a
A,
pop selling some more? How do you approach a day like this, Nick? It's a tricky
a, d-
day.
a day like this, I book profits on shorts I already have. I can't. You said something, Dennis, earlier. This is the classic something chasing one scenario. I can't chase the shorts either. So if I'm initiating new shorts right now, close to the money line, close to par, I can't do it. I'd be putting myself in danger. I do have a lot of shorts already, and those will be really green today. And those I'll book because the last thing I want is for Draghi to come out with a surprise, QE in Europe, because one of the things that drove us down today is the fact that we had some bad data from Germany, right? And so that just solidifies his argument for something over there. So yes, they've hinted towards 2015, but who knows now? We get Thursday night, overnight. They love to do it overnight, and we come up to a central bank Friday, like we did with Japan and China a few weeks back. So I don't initiate new shorts that are too tight. If I wanted to short something, like yesterday, I was sharing some thoughts, like shorting the Nasdaq via a credit call spread that leaves 4% room up, that pays me $3 on a $25 wide spread, would be a good way because today it would be at least a point or point and a half lower. So if I collected $3 yesterday, I can buy it back for $15.50 today. And if I did 10 contracts, I made $1,500 overnight. So that's the way I would short it. I wouldn't initiate shorts by selling the market right here, because what if you get that rip your face off rally and then you're up creek? As far as support levels, I see 2050 as the first break zone, and there is a huge support level at 2000, obviously based on the open interest for this week, but there are other lines in between. So 2050 sticks out, 2040, the area around 2040. And then 2025 to 2010 is the place where I think they're going to put the best brakes on if this tumble continues. And then after that, you have to look at the 2000. But hopefully we don't get there. Even though I have a short portfolio, but it's not to where I want people to lose a whole bunch of money. I make money just by it staying here. I don't need it to drop.
Nick, you had an interesting tweet there yesterday. I saw you tweet out that Apple, the person who had sold all that stock during that flash crash that we had a week ago, is actually up in the entire position here now because it has now taken out those flash crash lows. If we look at Apple here this morning, it's trading down $1.65 at
Yeah.
110.75. What are your thoughts here on Apple?
My thoughts is wag dog. You remember when they reweighted Apple from being 25% of the index down to 12? Because Apple was being used as a tail to whack the indices. So
Right.
my thought on Apple is they walk price up in order to profit on the indices side, and then they dump Apple and they're out. They double their profits. So they double end their profits, I should say. So they use these big tickers that actually can move indices, and they walk them up in price. Apple had no business rallying. There was nothing new. We knew it was going to sell out of every freaking iPhone they make. We knew that they were going to do this and that. They didn't come out with anything, no proverbial flying car. Yet everybody bought it up against all kinds of resistance for weeks on end, and shorts were rolling their resistance from one week after another and taking hits. And I said, I can't short it. I'm out of it. I can't follow it either. I mean, I have no conviction with it. Long term, maybe, but for this week or last week or the week before, it had no reason getting to where it got. And then suddenly, whenever they had their fill, boom, they dump it in a flash crash, and people shrugged it off. We didn't talk enough about it, right? They mentioned, oh, it could be this, it could be that, but nobody looked into it. That's a big ticker. We needed to look into it, but nobody did. But here we are. It's now it's debatable, but who cares? We just gave it right back. So yeah, Apple is I've been saying since last week, it's going to be at best a drag, and if it does tumble, then it's going to actually become an anchor. So, but today it's not Apple's fault that we're down here. It's just everything.
Nick, you made a nice call last week too. I mean, just I know you were just trying to be on the fence there, and you were just looking about the open interest. And Dennis and I were talking about this on Monday after the big drop, and you were just talking about the 115 level, and you had saw a lot of open interest at the 115 level, and they got everybody on that as they closed it at 115 even on Friday. The
Yeah.
calls and the puts expire worthless with the most open interest. Very interesting. Then you get that lower open on Monday, so people are exhausted. Maybe people rolled the 15 calls of the following week. You get the buck lower open. You got the rally to over the previous day's low by over 1 penny, and now you get the fallout. What are you looking at this week? Is it too early to tell where that open interest is bunching up?
No, the open interest has been almost the same the whole time. It looks like a Christmas tree, and it points exactly at the same level, which is 115, 117 area. It should be a wall. It should have been a wall for a while back, but they keep walking it up. It used to be at 110. They walked it up to 115. Well, guess what? Now it's around 115. Anything higher is pure resistance, and there's not a solid support area. Its best bet is the area of 110 to 112, where it has, based on the open interest, mind you, data as of today, is where the support lies between 110 and 112, and it's not massive. So it could easily go either way, depends on where the markets want to go. I'm out of Apple. I'm not trading it because of all of these uncertainties for me. I'm a very conservative trader, and I like to know where the ranges are. And like I've seen Google have a complete resistance wall for a long time, and so credit call spreads would have worked for weeks, and it's clear. You can see the resistance in the open interest. Whereas the Apple, I see it, but it's still running up against it, so I'm out. So Apple, yes, its best support are its fanatics. That's my opinion. It's all sentiment.
I want
Yes,
to
it makes gobs of money. Yes, it's cheap, but it's always been like that.
I want to talk to you about the Googster because I've been kind of trying to hold on to a longer term put position, and I believe on Wednesday or Thursday you sent something out. You were looking for, it was at a critical juncture. I don't know. I can't remember if you were leaning bullish or bearish, but you really thought that there was a big move coming up just from the technical formation. Were you able to get anything, off that at that? I believe that was that last Wednesday or last Thursday that you made a call on that we talked about that or we emailed
Yeah,
back and
I've
forth.
been my point on Google is that technicians, some good technicians out there are expecting it to break down, if this or if
Does that
that.
include me?
Yeah, I read your blurbs and we talk. So yes, consensus
Wow.
is people who follow technicals, they see. two scenarios. They wanted it to see the break the upside to get to like 555. Or there was a downside trend, a descending channel. They wanted to see it break the upside limit of that channel. It never did. It just kept on falling, skirting that line. And well, now they say, well, if this doesn't happen, then the other one should happen. And they see like doom in Google. I don't see doom in Google. I see that it's got a lot of resistance against it, so I'm not going long it. I am long it, but very lightly, but I'm now net short because I have short-term positions just to take advantage of the sentiment in Google. Yesterday was a doji, a big size doji, so it's got some flexible. Today, as far as resistance and support, long term, I like Google, but if the markets are going to correct, Google is going to correct. And from time to time, they treat it like a momentum stock, although lately they have not. Yesterday, it acted really well in a bad market. So that's a little encouraging. And it had some downgrades. It also shrugged them off mildly. So support in Google is at 525, which is where it's at. And then it has some support down to 515. So anything lower than 515, then we're talking 500 for this week. But I'm not saying it's going down there. I'm saying that it might have some speed bumps along the way. So I don't see complete support. I just see speed bumps. So if the markets settle, Google should settle. I don't see a particular Google issue that hasn't been known for a while.
Nick, I want to talk about these financials here, and they've been on an incredible run the last few days, but today the bottom is falling out of these things. Look at Bank America, closed at $17.66. It's trading down almost 50 cents right now. It's
Whoa.
17.19. Yeah, these financials, they're really taking heat here. I don't know if this is the grease thing that's punishing them, but I'm just looking across the board. Citigroup is down a buck, JP Morgan is down a buck, Goldman Sachs is down almost over $3. Goldman Sachs is trading down right now.
Yeah.
Morgan Stanley is trading down 60 cents, but that Bank America being down almost 50 cents, that's an incredible down move for a very thick stock.
Yeah, Bank of America. I mean, I'm not never a fan of everybody jumping aboard the same boat. I mean, how many people that say, "Oh, you see all these experts with all the same opinion," and like we say that CNBC, when you start seeing people you don't recognize on CNBC singing the same tune that the famous
Yeah.
people just sang about a month ago, that trade is over. These are, just they can't find anybody else to say the same thing, so they bring whoever that can come. So the Bank of America had some pretty bullish patterns, and it had a breakout from a descending channel from last month or so, and it met that breakout. So maybe people were waiting for that. And yesterday's candle was not pretty either, right? It was a really big red doji or just about flat doji. So everybody jumped. Oh, financials are going to do great because of rates. I don't know what's going to happen to financials because of rates. I don't think anybody knows. This is a new world. I don't know how higher rates are going to benefit banks or not benefit banks. I don't know the dynamics anymore. A lot of the home buying is all done by cash. So nothing is the same as before. So to jump on board blindly and follow at highs or recent highs is just scary. Plus, if you look at the Bank of America, look at the last time it corrected from that area. That was when was that March of 2014. Look at the March 21st area of 2014 and see what happened to it from then. If you think
A
50
good
cents is a
call.
long,
Yeah.
if 50 cents is a big drop, it went down to 14 from then. So in a month or so, 2 months.
Yeah, when the ball starts rolling the other direction, it can go for a while there. Momentum, this is the momentum market we're in, and we've been had a lot of upside momentum
Yeah.
lately, but today we're
Uh,
getting some downside.
what I wouldn't do is I wouldn't catch falling knives. If you're desperate to catch a falling knife, do yourself a favor and do a debit call spread instead. This way, you're fine. You know you can lose this much and nothing more, and you participate on the upside if you're right about the bounce. Give yourself some time to be right. So, don't put everything on the line right now because things may not happen the way you want them immediately.
Hey Nick, I want to ask you something about those debit call spreads or any kind of the spreads that you do. Do you keep them on as spreads the entire time, or do you like maybe try and work out of the losing leg?
I
Do you
I
ever?
work out of losing leg. Like for example, if I did a debit call spread in the SPX this week and it's losing, and I did it to protect a short credit put spread, credit call spread, and obviously I wasted my money with that defense because I didn't need them. Then I could sell the one leg and move it out in time and turn it into a calendar. So yes, I lost some money this week, but at least I'll still maintain the the defense into next week without any extra money. So this way I can, so I'll play around with time and play around with levels too. So if I had, for example, if I had a debit put spread on something that fell, let's say Bank of America, and I feel like it dropped enough, came close to my debit put spread. Now it's in the money, and I want to turn it into a credit put spread, so I can, sell the one leg that's closest to the money and buy one behind the one that's short. So now I'm bullish from this point on, and I've collected some credit. So there are plenty of ways to play around with it, and I sometimes do, but I like to keep it simple. If I put a position on, and if it's green, I just book it, even if I'm leaving money on the table. 2014 has not allowed me to stay in profitable trades too long. So if I have money, I book it. What is that? AGSIB? Any green I see, I book. That's an acronym I made up this year. I still live by it. I booked some profits on some debit put spreads in the SPX yesterday. Hopefully my members didn't. It was 2040, 2020. So they're going to make $17 on it.
Hey Nick, I want to ask you about your product a little bit, and you talk about these spreads, the credit spreads, and the debit spreads, and you also talk about selling them. And one thing that I think maybe some of our listeners has a question is really what size of account and what kind of account can you do this in? Do you have any naked positions on where you're going to be fully margin? What is the optimum size of an account to be able to maximize your strategies?
With credit spreads, the bigger the account, the easier it is. Because for the simple reason that you can take smaller premiums and step away further out from price, therefore from trouble. So if somebody was a bazillion account, they can take out 15 cents and have themselves plus or minus 5% on the indices, for example, on any given day worth of buffer. So they would really need a big move in order for them to be in trouble. So that's the easy answer. I can do it with a $10,000 account. I can do it a lot easier with a $25,000 account. 100,000, you can pretty much do anything you want if you exercise good process, if you have a good process in mind. Selling naked is never a good idea for anybody that's not a pro sitting at the terminal the whole day, because it just can bite you. Just for the fact you mentioned margin, what if today things are tumbling? What if it tumbles worse and then you get a change in rules? They can change rules anytime, and they say, okay, the margin we had reserved on your sold naked put on the SPX is now 3 times. Come up with the money, or buy defense or close your position. Even though your position is going to win eventually because the markets are going to fall short of your sold short, you still need to come up with the money to cover it, and therefore they force you into trading stuff you don't want to. So in selling naked is pretty risky. I did it. I've done it. I do it every once in a while, but under really controlled conditions.
Okay, Nic Chahine, MarketFi maven, and author of Create Income with Option Spreads, spreading his wisdom with Joel.
Real quick, GoPro told you, did I not? If that pattern breaks, the 50s are coming. So hopefully somebody took advantage of that.
I mentioned that earlier in the chat. Thanks a lot, Nick.
Okay.
Have a great trading day. I'm going to miss you next Tuesday, but I'm sure you'll be able to carry the show without me here.
All right. Talk to you later.
Okay.